David, the market this week has been looking very closely at the dot plots and wondering what happened to the pivot. But to me, there was a lot of messaging from some of the central banks here in Europe. I mean, the Riksbank telling us that, you're going to go higher in rates and they just stay there for a long time, a number of years, possibly 3 years, which is somewhat of a shock. But then on the other side, we've had Norges Bank effectively telling us you get these jumbo-sized rate hikes out of the way and then you have to slow them down because suddenly demand is falling away and you can't continue at the same pace, even if you've got inflation well above 6%. What's the messaging for you now from the Fed and what investors should do?
Well, it's interesting. One of the things that you mentioned there about what's going on in the UK is how they are trying to reduce taxes to stimulate growth. Kind of sounds like old, Reagan trickle-down economics from back in the 80s. And if we look at the just runaway inflation we had back in the 80s, what the Fed did to combat that is they increased interest rates dramatically. And a 0.75% hike was like a tiny one. They had no problem raising interest rates dramatically to overcome inflation back, during the Volcker days. So I think that we have not seen the end of, big interest rate hikes because there's so much pressure, inflationary pressure out there right now. And it is so uncertain right now that I think that we're going to see more hikes continue. And I wouldn't be surprised if this hangs on for a while.